Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a look here at NEM or XEM, depending on how you look at it, of course. Ticker symbol XEM. And essentially what we're looking at is just best practice here in these situations, because I get a lot of requests for coins that kind of pump like this, and inevitably in most cases they will retrace at least to certain levels. And we're going to look at Fibonacci retracement and just generally help understand what's the best strategy for situations like this, right? Because again, we look at a coin like this, it's done some pretty amazing things in the past, okay? So in truth, this absolutely has tremendous potential to do very well. Just keep in mind, it sold off heavily back in March when Bitcoin had its first dump back in 2021, for example. And Bitcoin started progressing downwards from 64,000 all the way to 30,000 in a very short amount of time. And that, of course, is reflected here. But the bottom line is that it did very well when Bitcoin was on fire. Bitcoin is not necessarily on fire right now and it's pumping. So there's probably a fundamental catalyst that's causing this to happen. And just know that most fundamental catalysts are subject to pumping and dumping, whereas they shoot up when the news comes out. They shoot up when the hype comes out, and then the news essentially is when it sells off. In other words, whenever the event happens, it's going to sell off. And I don't know specifically what's going on with this coin, honestly. I don't have enough time in my day to research it, but I can tell you that in situations like this, from a technical standpoint, there's some really easy ways to identify. So in other words, before we get started here, let me just go ahead and preface, I'm not a financial advisor, right? So I do love teaching people to trade. I truly hope you can learn something here today. My goal is to help you become a better trader. So if you want that for yourself, CryptoCache.tech is the website, link in the description below. I send out signals for every trade that I take. We've been taking some decent profits with long positions for Sandbox and short positions for Bitcoin. Really cool situations there, but all in all, fantastic in that sense. But in truth, the whole point and the benefit and the reason why I'm seeing a lot of folks come over is to learn how to become better traders. So if you want that for yourself, again, CryptoCache.tech is the website. I do offer discounts for military and third world countries. Thank you so much for your service. Taking a look here at XEM though, here's what's going on. So we can see obviously most recently, July 2nd, whatever happened on that day, we had a significant increase, right? So the increase on that one trading day was an 80% bottom to top. Okay, it came back down, inevitably retraced all the way down to 0.382 on Fibonacci. In other words, when you have an increase in value that is parabolic, for lack of better terms, it happens very quick, very fast. The likelihood of the price action coming down to the 0.5, 0.382, or 236 area is very high. In other words, it is these sections here. So we see this here. This is 236, this is 0.382, and this is 0.5. In other words, these are the levels in which the price action comes back down. It's a percentage of how high it went up, right? So it's common for something to shoot up like this and to come back down and kind of rest and relax in the lower two tiers. So what I'm getting at, and the reason why I'm prefacing that, is to kind of let you know that with us increasing here today, why it's not a super significant amount, it's not 80%, it's 46%. In this whole trading day, what we're looking at is a pretty significant change nonetheless. So we can hypothetically anticipate the price action, not necessarily to come all the way down here, because that might be a little extreme, but we could and very likely should expect the price action to work its way down into the 0.236 to 382 range. It's just a very common characteristic of coins that shoot up and shoot back down. Just kind of letting you know. There's also potential too for the price action to continue higher if this is a healthy continuation. We're going to look at that as well and see if we have a nice healthy staircase pattern, it might actually continue to maintain its price point where it's at. We also want to take a look at some recent key level supports and resistances. We can kind of see here there was a resistance range right at about the 0.05 mark, basically 5 cents or 0.053, right at that range. So just keep in mind, that there is a little bit of resistance there, and we can also kind of address as well, this obvious line here too, pretty much right where the price wicked up previously, where we see the price commonly coming up and getting rejected. So it would be unwise to expect the price action to come up and just to shoot right past 6.8 cents. I think it would be kind of naive to think that, because it's been a strong resistance level in the past. We need to see more volume at that level in order to be able to break through it, right? And if we take a look at the volume, while there is a decent amount of volume in this range, there's hardly anything right at the basically 6.8 range. So in other words, it's okay that the price is where it's at. It might actually be able to maintain itself, but we do need more volume at higher price points, okay? All right, so that's kind of where we're at there on the daily. The one thing also to recognize here as well is we broke above 50 on the RSI, which is fantastic. but we're hitting 70 already on the RSI on the daily. When you hit 70 on the RSI on the daily, it is common for the price action to retrace. Take a look at its history here, for example. Take a look at the price action came up, even though that was more of a healthy continuation. We saw the price action immediately decrease as soon as it hit 70 on the RSI. It's a very common characteristic, basically just implies that it's been too high for too long, and in that last 14-day period, it's considered to be overbought. That's what we're seeing right now already, only in 1 or 2 trading days. So do you really want to invest in something that's overbought, or are you going to plan to sell that position if you're profitable? Most whales will sell the position, ergo push the price action down. Again, just some things to kind of think about. These are all factors that are you just kind of add together and kind of figure out, hey, which way is it going to go? Well, in its history, it's done X, Y, and Z, so it's going to probably follow those similar trends. Okay, so again, technical analysis is really just identifying patterns and trying to go with probabilities of one thing or the other. There's no guarantees in this market, but you can increase your odds by using deductive reasoning on specific time frames and finding specific indicators, giving you indications that you wouldn't normally be able to see by just buying and selling on a minute time frame, or even just say the daily. We want to look at the 4-hour and the hourly as well, and we're here right now in the 4-hour. And to touch on this, we've got a somewhat of a golden cross here. This isn't phenomenal, but it does happen in most cases when you see the 50 intersect with the 200 in an upward fashion. More specifically on the daily is a more profound response, but on the 4-hour we can see this happen as well, where it just kind of shot up and intersected there, and that's kind of giving us the indication that the price wants to take off. So it effectively did that. Now you can ask yourself, is this a self-fulfilling prophecy, or did it happen because of that? Honestly, it's hard to say specifically. It's not super relevant in my opinion, because I would rather see that on the daily, but it really just kind of implies that these moving averages, when they cross over, it tells you there's a shift in momentum from bearish to bullish, or from a range to an ascending type of trend. We may be in an ascending trend right now, but on the 4-hour here, we've got a very large candlestick. This is concerning to me. I wouldn't be surprised if the price action continues to retrace based on a 36% increase in a very short amount of time, probably within about 2 or 3 hours. So we'll see if that's healthy or not, but the thing that is unhealthy here is 70 on the RSI was broken before, or it was getting tested just before this 4-hour candle started, and now we're tremendously above. So in some cases, the price action can stay above once it closes above. So in truth, we could actually see the RSI stay above 70 for some time. That doesn't mean that the price isn't going to potentially bleed out over the next few days. There's a stronger potential for that than there would be for it to increase. Again, is this continuation healthy? I wouldn't say so. This doesn't look very healthy. It's not the staircase pattern we like to see. It's more of a parabolic increase, which leads to a parabolic decrease. Okay? So again, what goes up must come down. If it goes up too fast, it'll come down quickly as well. Keep in mind also, when we have these things happen, it's less likely to want to increase later if you were to have a strong decrease in value. So, it takes a while for things to recover. It's very similar to falling down a flight of stairs. You're going to be messed up for a while versus just tripping and falling down the last step, right? I know that analogy is kind of strange and weird, but it kind of gets the point across that if you are, in a wheelchair for months or weeks, it's going to be hard for you to start walking again. Well, coins like this, they have a tendency of getting, falling flat on their face, and it takes a while for it to recover. Again, just just some analogies they like to throw out there. Doesn't matter, not super relevant here. What is relevant though is that on the 4-hour that we already identified, we could see that we were overextended, right? On the hourly, we can also see that overextension here too as well. In fact, why don't we take a look at TD sequential, even though this doesn't tell us much. In other words, it tells us we keep hitting 5s and 4s and getting resets. It does imply that this should be the highest point in which it'll go right now. So in other words, for lack of better terms, I don't foresee this coming much higher, especially with a super large candle wick. While this hourly candlestick is only 35 minutes in, we can see though that if we close in this area, we're going to have some problems. It's going to be a hammer down, they refer to it as, whereas the price action should come down lower. Okay. So again, keep that in mind. That's kind of where we're at here for the moment. And in all reality, at this point, it's not terrible, it's just not great, right? So I would just recognize the fact that we have super large increases, very large volume spikes, and that's inconsistent. Those inconsistencies cause consistent sell-offs. So I would kind of just urge you to be cautious and careful. That's why I like to make these videos, to help you understand, again, the best practice in this environment. So if you are profitable right now, it might be advantageous to consider closing some of your position. I like to close 50 to 80% of my position on the first or second profit target. And if you haven't hit your profit targets yet, they're either too high or you don't have them. Both are problems. You want to have multiple profit targets when you take entries. And you also want to have trailing stop loss at the very least to ensure that it adjusts with your targets. We use a moving target trailing stop loss too, where basically as soon as we hit our second profit target, the trailing stop loss moves to break even. And if the price reverses on us, we take our profits. We've already taken 60, 70, 80% of our profits. So that's kind of where we're at here for the moment. I would say that XCM is doing well, obviously, but will it continue to do this? It's hard to say specifically based on the technical analysis alone. I would say that it's more likely to retrace in the near future than it would be to increase. Once again, we're under some key level resistances, and at this point, I think there's potential for the price action to, at the very best, go sideways for a short while, and then maybe increase again. While it has a history of doing very well, you got to keep in mind, it got knocked down very hard, and it's not going to, we should not expect this behavior again, okay? I get a lot of questions like, hey, a coin did super well in the past, is it going to do well again in the future? The likelihood of that is fairly low. Honestly, it takes a while for this to get there. And in most cases, we're going to need to have a lot less fear, uncertainty, and doubt in the market. I think we're at a 30 right now for Bitcoin. And in that sense, with that being still fairly low, or I guess you could say high, we have too much fear, uncertainty, and doubt. That is going to cause stuff like this to happen without consistency. Okay, so again, big picture stuff there, just thinking out loud. But I hope you found benefit here. Of course, I would say the price prediction, pretty simply put, is going to go sideways or down from here. I'd be surprised if it maintains its price action, unless, of course, we see this volume continue. If you see this volume start to dissipate, the price is going to continue as well. Okay, let me take a look at this here in this history. What do you know? The price action came down with the amount of volume. Okay, so if you start seeing a diminishing return on volume here in the near future, you can expect it to continue to go lower as well. Again, always pay attention to volume. It speaks very loud. So anyways, thanks again for joining me here. I hope you learned something once again. If you want to become a better trader, CryptoCache.tech is a website, link in the description below. And I do look forward to working with you. Hope you have a fantastic rest of your day. We'll see you next one. Take care.